All right, so we're on a new month here, February. Looking at end of month, January was Fed day, so little interesting action here. This is the regional banking index. You'll probably already have seen the headlines by now, but down pretty substantially on the past few days. You're still holding this overall W pattern. Definitely was helped out by that BTFP sort of program, which is meant to expire. So maybe that's some of the concern here. Just interesting looking back in the past, right? Other than the trend line, which had basically held, you do have a similar W type pattern to hold the lows. So we'll see if this zone will hold or if it will be violated. Just looking for signs around the edges of any potential risk to the overall risk on bullish appetite. So, junk bonds are still holding up above the 9-week MA, as are corporate bonds. So nothing too extreme there. Looking at Bitcoin, it's still in that range of the 44 to 40K as well. Hit that basically to the T nicely, right? And so you're basically just consolidating mid-range here, still against your rising 90 MA on the daily, which is nice. So hopefully this is bull flagging out and will push up if you're looking for short-term sort of gains or momentum reignition. On Fed day itself, SPY took a bath, as did dollar, as did rates. So that's kind of interesting to see. It's nice to see the reclaim. You'll see here after hours, we're pushing highs once again on the back of big tech earnings, favorable reaction. So probably just nothing more than a one-day dip for SPY. Looking at continuation, we'll find out tomorrow morning as we get the morning gap, and then the continuation in the first 30 minutes to 40 minutes. On the TNX itself here, pushing 2 down days into what basically pushed into that 420 level. Kind of makes a little more sense if you look at the weekly. You had just some major levels, a pivot around here at the 420. So really retesting that breakout of basically a 9-month roughly bull flag, which pushed you up to about 5% there. So nice push down in rates. We'll see if we can make new lows, or do you have to spend more time consolidating before you push low? Because it was a pretty big movement, right, over the past, it looks like 4 days of straight selling. So a little bit of bid there mid-session, as you could tell. Dollar, it's a bit hard to say, right? You're just still range bound and trapped. You might try to envision inverted head and shoulders, funny enough, on the daily chart. I wouldn't make too much of that, though, because just the simple fact that we more or less are range bound for quite some time here, and through the 104 to 101 spot 5, going back, year and a half. So just want to watch out for any potential signs of equity stalling out. But so far, best 6-month strategy, November through April, playing out basically to the T. Solana did break out of that pattern for one day and pulled it in. So reconsolidating mid-range on the rising 50-day moving average. We'll just keep a tighter look at the 4-hour chart just to see how that's continuing to progress, whether or not it's going to re-break out or pull in a little bit lower for another accumulation, perhaps down near this 85 type area. Finally, uranium, took some time off that 20% up week. You came in, pulled in pretty deeply back to about the gap area. So that's nice, sort of gap refill, and then had some pretty good strength off it. It looked as if you might even be able to pull in deeper down to that 50, but it wasn't going to be the case. Held the 9-week so far, EMA, and pushed up quite nicely. So we'll look for what tomorrow brings. Are we going to come back in and fade some of these slow starts, or is this truly it? Nice volume. So I think that's about it for today. See ya.